Hey, good people, how you doing? Welcome back to Stock Up with Larry Jones. Listen, I know I did a video earlier today, but I just got through shooting a video with Stocks with Josh, and I was going to air it tomorrow morning, but I decided to air it now, and you're going to hear me refer to yesterday being Monday. Well, we shot it tonight, and I was going to air it Monday, but there's some things said, and I don't want you guys to miss anything or an opportunity to buy or not, all right? Anything we say is not a suggestion for you to buy, hold, or sell. Josh had some buffering problems on his end, and so I edited that out. I just put a few things out there, let him cook, and then there's some helpful tips in here for you guys to see where there's buying opportunity, okay? Enjoy. Hey, what's up, good people? Me and my guy, as you can see, I'm in my workout outfit, but me and my guy Josh was talking, and we decided to have this conversation in front of you, and it's going to pertain to where the market is, what we think. Sometimes you want to have someone else's opinion and not just yours. So without further ado, or further to do, I'm going to bring in my man, Stocks with Josh. And if you're not subscribed to his page, it's Stocks with Josh, okay? This is also sponsored by Money Moves, where we are teaching you how to do options step by step. Talk to me like I'm three, all right? Josh, go ahead and introduce yourself.
Well, thank you, Larry, for having me on. And of course, whenever we get together and we talk about what's going on in the market, it always feels like we should be sharing that with the greater community as we just bounce ideas around. Now, the other day we were chatting about Apple and what was going on there, the recent lows. Where could this go next? And I definitely thought this was something that people would like to hear. But for the most part, Larry, we've tested the lows, and there's already going to be a bunch of people that are hoping after that monumental green candle last week, they would love for Apple to come back under 180. Sorry about that. But the whole deal is that it's more likely that we will go a little bit lower tomorrow, but it's far more likely that we will make a higher low on Apple right now, because when we can go back and forth on this, but the bottom line is that the majority of the fear got priced, and there is the opportunity of some things getting worked out here ahead of us. And with that, people are slowly re-entering their position on Apple.
Um, um, I'm gonna bounce around because I'm gonna talk about the overall market too, and I'm not gonna play it, but Tom Lee came on today and he said something that I agree with, and I talked about it on my video on yesterday, and he said, hey, when the VIX, I start nibbling when the VIX is over 45, but when the VIX hits 50, it's a good time to start buying. He made that, and then he was talking about the 200-day moving average. And in those two together, even it being a volatile market, you know what? I'm going to play it. It's like a 30-second clip, right? I'm just going to play it, Josh, and then I want you to comment on it, okay?
Sounds good.
So here we go.
If someone had an investor hat on, not tactical hat, really good opportunities are emerging because the number of stocks below the 200-day moving average was like 15%. Historically, that's a strong buy signal. I mean, you're going to find a lot of bargains there. And the VIX got above 50, and it almost always pays you to buy the stocks when VIX is above 50. But in the near term, it's a roller coaster. I mean, it does feel like we're having a lot of zigs and zags, and even over the weekend. But to me, I think everything that happened over the weekend, including the Sunday further explanations, all of this is still unequivocally positive for stocks.
He was just talking about the VIX spiking over 50. It's still positive for stocks. And he was talking about, stocks that are under the 200-day move, beneath the 200-day moving average. Let's just talk about the S&P 500 as a whole. So both of those things did happen on the 10th, Josh. So it was the 10th then when it actually happened. So I went back and we looked at when the VIX actually spiked. And let's see here. Let me show this right quick. So I'm going to use the S&P, Josh. I'm just on the daily. I got the SPY on the daily. So if we go
Yep.
to the 10th, he was saying, and here's the 200 day, he was saying that here, right? And then he was also saying the VIX hitting, all right, let's go to the 5 day on the VIX. And he was saying, you could see there April 10th when it actually hit 55, right? And so I just want you to tell the people, they've heard from me. I want you to tell the people what you think about that.
Okay, so I want to first interpret what I heard from Mr. Lee. So he sees it the same way I do. If we go by technicals alone, all of the buy signals that we would normally react to, we saw between the 7th and the 9th when the market was bottoming out. We saw extreme panic on the VIX. It actually hit on TradingView, it actually hit like 58, so right under 60, which is extremely unusual and typically signals absolute irrational fear. And from that point, the markets had sold down. We saw all of Magnificent Seven on incredible sale prices. And that fear, right? It just begins to cool off because where are you going to go from absolute sheer panic? You're going to begin to slowly enter in. And I want to throw this dynamic out, Larry. It's about when smart money or institutional money begins to take positions of risk for upcoming earnings. They typically do it about 2 to 3 weeks before the earnings event. And literally right between the 7th and 9th was literally between the 2nd and 3rd week. So right on schedule, in addition to the oversold conditions, this is when they would begin to buy up in preparation of going towards an earnings event because they already took a lot of money off the table. This is typically when they would begin to go back in a little bit. So the conditions were ripe. Now, what I liked about what Tom Lee said is he said it all in a spirit of absolute uncertainty and hesitation. He's like,
Yep.
well, yeah, normally you buy when the VIX hits between 55 and 60. And normally you buy when, you've hit oversold conditions on the RSI. I would 100% agree with him. Now, the other big indicator that I needed to see, that I did see last week, and you'd say, well, Josh, if you saw all these things, why didn't you scream buy, buy, buy? You know what? It's really hard. And there's that feeling like, okay, this is bad. But the truth is, we've never been in this territory before, and we could really just roll off the cliff and have a 30-40% downturn. I mean, these things could happen. And so, I did buy. Did I put all my money to work? No. But what we saw, Larry, right there after the 9th was we saw true and genuine support volume go in. And so it wasn't like it was retail buying that dip. Probably retail was scared, and I'll throw myself in that camp, and I'll say Tom Lee appeared to be in that camp. Nobody seemed to have great certainty, but institutions did buy that dip last week, and we saw some stocks come up $20-$30 from their lows or more. And so they rocketed. It was an unprecedented buy day. Now, do I think that it means that we're entirely out of the bear trend and that we're done with all the problems? No. What it really means, though, is there's enough for us to justify that we are climbing out of the lows. And now, when we've tested the lows, we're not going to go straight back to the lows. We're going to go back up and see how price interacts with resistance. Is there just as much selling volume at resistance? Now, you say, okay, have we gotten there yet? No. The resistance that we need to go test is the 200-day moving average on everything, including the SPY. And we got close to it. We got 3/4 of the way there very, very quickly, but we stopped short. Now, I'll just throw it out there, Larry, that I think that we're still going to see some selling pressure this week. And I think that that's going to be, for me, a setup to be a little bit more aggressive with my buying and less fearful. So did I load super heavy the week that everything was capitulating? No, I nibbled that week, and I was hoping for a little bit more down. I'm going to have to nibble a little bit on any downturn we get this week, still eyeing earnings ahead, because the market can have some twists and turns in it.
Right.
But the fact is, it tested the lows. Now we got to go test resistance. It's like a ping pong. The team bull smacked it over to team bear side, and they smacked it pretty darn hard.
Finish that last part. That
I
very
was just
last part.
saying, I was just saying that for everything ahead, and we're not far away from it. The Bulls have sent the ball over into the other side of the court. The Bears are going to have to react at resistance, which I'm saying across the board for the S&P 500 and the Magnificent Seven is the 200-day moving average. I do think that this week is going to be choppy because it has to digest the fact that we just had this monumental move up. So we can see some downtrend Tuesday and Wednesday. But in my mind, this video is meant to be the early announcement that if you're going to take any risk between now and earnings, it would be this week, not next week, right?
So my video on yesterday, Monday, I said the same thing. I literally said the same thing. And you haven't seen my video from Monday yet, have you?
I didn't see your Monday video yet, sir.
So fundamentally, I explained the exact same thing you're saying. That I agreed with Tom Lee. I showed the VIX. I showed the 10th, and I showed popular stock like Tesla, Nvidia, and I showed they all were at their lows. They all spiked down as the VIX spiked up, and it was a buy signal. And we did the same thing here, Josh. We started nibbling, but we didn't go in heavy because we, just like Tom Lee and yourself, we were cautious here. And so now we got some dry powder, right? Because, and you and I can have a whole nother conversation. We're going to do this more about what's going on out of the White House, which is ruling the stock market right now.
Yep.
It's not the economy. It's going to be the economy if we keep this up. It's not the economy. It's not.
You're nailing it, Larry. I agree with you.
It is tariff. And just like on yesterday, on Monday, we were looking for an open. And this is what I want people to be leery of. So, Josh, I told on Sunday night, I told my money movers, I said, hey, be careful of and then I told them Monday morning, be careful of the open because any good news, the market's going to run up. But that's all of the run up is going to happen in the pre-markets. And that's what I said. And
I've been seeing that too, Larry. I've been seeing that too.
And that's exactly what happened yesterday, Monday, that it was in the pre-markets and then you get a fake out. And soon as opening bell comes, you get a little and then drop, fake out again, and then drop. And so this is what we're prepared for since we see the patterns. And so now I'm going to trust what I see and what I think now. And if we start to get anywhere close and revisit the lows of the 10th, me personally, I'm going to buy more. Anything I say or Josh is not a suggestion for you to buy, hold, or sell. Josh and I never tell you got to buy. That's up to you. All we do is give you the information. All right. So that's what I see for the overall market. What do you think about
Well,
that?
I wanted to throw this out there, Larry, too, about the banks. I've been reporting earnings, and
Good.
I've never seen an economy in huge trouble when the banks are making money. That stood out to me. I remember 2008, 2009, and the banks were struggling, and there was consistent bad earnings. And the truth is, last earnings for the banks were good, and they went up. We're getting earnings again, and they're going up. And so it's hard to imagine that the economy is doing so poorly when the banks are doing well.
And we have jobs.
Yes. Which is another major point, Larry, that I think that, I hear being discussed a lot, that, yes, there was a reason for us to have this massive quake on Wall Street, but with the labor market remaining strong, these big tech companies still intend to grow AI, and they need people for that. They need resources and people, and they're very reluctant to let them go because nobody wants to be left behind in the AI revolution, because this thing is not just it's not just an American thing. This is a global AI race. Nations will be defined, companies will be defined. Now, I had been bearish, Larry. I was concerned about Google, and I think Wall Street was too, and they were selling Google down. But I've become more confident in Google and view it as one of the better priced big tech companies. And why have I become more confident? Well, I used to be concerned that they would lose their moat and that they were losing the AI race. But the truth is, Gemini, their AI solution, is just rocketing past ChatGPT and DeepSeek and a lot of other providers. And it's showing me that they understand the need to provide these types of products. And I even begun to see advertising, commercials. These guys have the money flow and the money stream to get the word out that they're going to be the leaders of bringing AI to everybody and everybody's phone. And so, right now, the two big people that touch the most consumers are going to be Google, and it's going to be Apple, and you're going to see Meta, right? And then after that, you're going to get your Amazons and more from there, Microsoft. But those three companies have to prove that they can win the AI race. And it's arguable that the two that seem to be out in the front right now is Google and Meta. And Google is more and more proving that they may be able to hold on to their moat, and they may be able to cash in on the AI story faster than most companies.
You know what I like about Google? Their PE is 20 right now.
Tell me, sir.
And Google's
Yeah.
PE is 20. And let me see what Microsoft is at this moment. And for big tech, that's good. So Microsoft's PE is 31. And
There you go.
exactly. And you got companies, big tech like NVIDIA, the PE is actually getting lowered. For those of you that don't know, the lower the number, the better it is. You're paying less based on the earnings. And these companies during this tariff war, let's face it, the entire market was too expensive, right? And then you could put a PE on an entire sector. So when the PE of an individual stock is near or lower than the entire sector, it makes it more of a value play. So when you brought that up, it's looking quite attractive as far as the PE and it being fair. And on top of what you said, the AI race and the president's push to be first, right? We know that China's trying to be first. We're trying to be first. All over the world, they're trying to be first with this AI race because there's trillions of dollars. As a matter of fact, Josh, I don't know if you agree with me, but I believe AI is going to save the entire stock market in one way or another. And I also believe that AI prevented us from going into a deep recession last year. All right. So
I agree.
that's what I think. So Josh, I want you to, we don't want to keep this one long. We got to have you back, man. We're going to have to do a couple of days where we just have you back. Maybe we'll just take 3 weeks and do technical Tuesdays, but we'll make it any day of the week that we can fit it in our busy schedules. What do you got to say in closing?
Well, it's a privilege to be on the show. Thank you, Larry, for having me. I always enjoy connecting with you and the community. Yeah, in regards to AI, I think that people need to understand this. Everything has, like, you've heard the analogy, it's like a two-edged blade, right? One edge is that this innovation is going to improve productivity, and yes, indeed, it's going to reassert us in the global marketplace. However, the other side of the edge is that people that are lagging getting into AI, they really do lose or have the threat of losing their jobs. And so now that is where I think people need to take seriously. If you aren't going to embrace AI for your future viability in the workforce, you had better join the investor economy, right? And learn how to take advantage of these moves on Wall Street.
You were just saying Wall Street. Go ahead and finish that.
Yeah, I was just saying that people need to get their money right, and they need to begin to dial in how to make money on Wall Street, because we have this age of innovation where a lot of jobs are going to be replaced. And so you need to be looking at how can I be part of it. If you're not going to be the guy writing the code or interacting with AI or introducing AI to your company, you sure had better figure out how to ride that AI money horse on Wall Street.
Yep, you are absolutely right. It's a pleasure to have you here. And as a matter of fact, one of these, you and I are going to have the difficult conversation one of these days here, real soon, about tariffs and the reality of how long it's going to take to onshore these companies. And some of the jobs that we're bringing back to our shores, they ain't going to you good people. They're going to AI. Listen, good people, I want you to know in closing that this is brought to you by Money Moves, where I am teaching options for dummies. So I wish I would have had this out for me because it's options for dummies. All right. And so, Josh, I'm starting. You know how I teach. Talk to me like I'm 3. I'm starting from the very basics. But when we get down the road, I want you to come in and teach a class on staging. How do you stage the day before an option setup? So
Absolutely.
Would you do that for us?
I would love to.
That would be great. All right. Hey, good people, we're going to leave it right here. We'll see you later. Live, love, laugh, and learn. Make sure you check out the only link below. Peace.